Welcome, Gowinvest family. I'm Sobi Kenobi, and today we'll be talking about candlesticks. This is lesson 2 in our series of Gowinvest 101, your one-stop shop for everything to do with investing. Without further ado, we're going to cue the intro. Okay, so today we're talking about lesson 2, candlesticks. I want to make sure that I have the full page selected, so I will select away from that. So what are candlesticks? Candlesticks are a certain type of representation of data. So you've probably seen a charting software or something like that give you data in this candlestick format. And you're like, why are traders using something like this? Why can't they just use the line graph? It's a lot easier to see through the line graph where things might be trending versus the candlesticks. And the reason being is that the candlesticks give more information than just the trend. And it's because it contains the open, the close, a high, and a low value. So what is that? Let's go back and talk about basics. So imagine what we had was a graph like last time, the order book. In this case, our axis on the x-axis is time instead of price. And price over here is on the y-axis. Okay, so you might say start your share or whatever it be at $19. Then it'll go up to $20, then it'll go down to 18, go up to 22, then go down and kind of close off there at 20. All right, so let's mark these down. So this is all that it did within a time frame, and we can call this time frame 1 minute. But a lot of brokers have options for 5 minutes, 30 minutes, 1 hour, 4 hours, and the like. So what is the candlestick? So the candlestick is a representation of whatever time frame it be, the lowest scale of that time frame, as a form of its opening, being the 19, its closing, which is the 20, the high, which is 22, and the low, which is 18. So here, the body of the candle would be from the open to the close. Okay, that's the body. And it'll be colored depending on the overall movement of the price. So if it went up, it'll be colored green. If it went down, the other way around, the open was here, the close was there, it would be red. The rest of them are kind of connected by a wick. So this is a wick, this is the candle body. So that's how you draw a candle. Let's say we opened at 19, we close at 20, our candle would be red. So it gives you a lot of information, and we'll go on to the next step by talking some of this information that you can probably get from a candle. Let's say we opened up here. We went all the way up, but then sellers started taking pressure and moving the pressure all the way down. So we ended up closing right around where we opened. So you opened here, you closed here, but you have this huge upward wick. This upward wick and this head, depending on whether it shoots past that or shoots above that, indicates something called rejection. So it tried to go up and it was rejected and went back down because people psychologically cannot support it at that level. I mean, again, it has to be taken with a grain of salt because this is one piece. If it's at the 1 minute chart, really doesn't give a lot of information. Ideally, you'd want to look at some of the greater, maybe 1 hour or something like that windows, because this won't indicate a rejection maybe at a minute. But so in this case, whether it be green or whether it be red, this is what is called a momentum candle. It shows that there's a lot of pressure. And we talk about things in terms of pressure because we know that the price is being tugged left and right. So how much pressure or tension are these people pulling versus those people pulling? The people who are selling and the people who are buying. Mm. So if you're pushing the price back down, the buyers are actually pulling. Um, Actually, the sellers would be pulling it down. So people who are selling more, selling more, selling more, the price is going down. So I think in this case, these would be the sellers and these would be the buyers. Okay. Um, the other type of candles is candles in succession. So say we have one candle followed by another candle. If this was red and this is green, I was hoping that'd be a stronger green, then you can see that this was engulfed with, this can kind of engulf this entire candle. This is called a bullish engulfment. Now, there's also so this momentum can kind of tell you a bearish sentiment. And you'll always have analogs to each of these in the bullish case. So say there was a green candle, again, with a huge wick coming from the bottom, that means it bounced off of a level of support. And then this is affirmed. So these are rejections and this is affirmations. So it affirmed the price. It tried to fall, sellers tried to push it down, but the buyers made sure that the price stays around that area. So that would be the bullish sentiment. So this, in this case, what you have with the engulfment is people on one round decided that they were selling, but then it turned right back around on the next round. The buyers won. Um, so the buyers pulled it up and the price went up. So here you have a bullish engulfment. You can have the same thing where you have a small green candle and a big red candle. And the thing is that the um, red candle moves it more than the green candle did. So it went from here to up here, came up here, fell down, back down. These usually are followed by small wicks on top, and they're called tweezer tops. Let's talk about one last pattern, and then we can probably go into some sort of an identification task where we'll see this live in the action. The other thing that I want to show you is what happens when we have a small body and we have things pointing on a small wick on top and at the bottom. It doesn't really matter about the size of these wicks, but generally we're thinking about small wicks up and down. And it really doesn't matter the color of this body. Could be red or black. We really don't care. And this is called an indecision. There was INDEC. And the reason is it didn't move one way or another. People couldn't decide, and there's no heavy pull or push in any one direction. So it's really just no one's making up their mind. Is it worth buying? Is it worth selling? Is it worth moving at all? People are just questioning. This doesn't give us a lot of information. It's just holding the status quo. Now, there is one movement that takes that into consideration. I'll try to fit it over here. So imagine you have a red candle. I don't think that was red. Let's do it again, red. All right, so assume we have a red candle. Then we have an indecision candle. And then we have a green candle. This is called a morning doji. This is called a hammer. This is called a shooting star. And they have funky names for all of these. Mostly these are by an 18th century Japanese rice trader, I believe it is, that built up these patterns from trading rice. And he was assessing the value, he was doing the statistics, and then he built up these patterns. So a lot of these doji and whatnot have very Japanese translated kind of names. But these are basically on his thesis. And so you're going to see that a lot of people talk about them. And we're going to go through an example right now of how it works. So like I said, in short cases, in 1 minute time steps, it really doesn't give us a lot of information. If we move on to maybe say the hour chart, we can see some examples here. Like in this case, what do we see here? We see a bullish engulfing because they went red, then it went green, and the green overpowered the red to go into an overall bullish standpoint. In fact, if you see three of any kind, it's called the three black crows, the three advancing white soldiers. Here you see a few indecision candles, and the reason for that, they call these spinning tops, so it's not really getting anywhere. Let's go and let's see something else here. What do we have here? We have the hammer. You can see that it has a head, it has a tail, and then it was rejected at that price, and it was forced upwards. So that is a hammer. I want to see a good indication of a star, and here we have a good indication of a morning star. So the bearish sentiment one would be the evening star, but this would be the morning star. Where you go, it goes red, then it has indecision, then it has a green. So again, it's not without its flaws. It gives you a little more. So what this gives in on top of the order book is it gives us a little more context. But that context only gives us like a 3 or 4 minute window. It doesn't give us an overall value of the stock. So say if we were on a particular type of application or something like that, we could not see the overall trend here in the hour. Gonna do the day sector. So here you can see it went up and then it started going down, and it'll give us some, so it'll give you some sentiment in terms of time. But it's still, how do you use this in actuality? Let's try to get to maybe, I want to do a coin market cap. So Tezos, something where we can do a trading view and maybe put in some indicators on top of that. So say we have this here, we're going to go to maybe say the 1 hour chart. We see some points here. I want to zoom in on this. I'm going to zoom in. Okay. And let's see, let's add an indicator for an SMA, maybe a 20 mark SMA. I'm hoping it's a 20 mark SMA. Doesn't seem to be that, or like a 120-day SMA. Let me see, how do we change the value of this SMA? So I want to change this length to 120. 120 SMA kind of gives you the direction. So this is considered the area of value. So there was a point in time where it was above the area of value. Now it's generally been trailing below the area of value. Let's get it by the day so that we can see it better. But you have to build an area of value. Okay, where you think, on what kind of scale is it valuable? Or what is the intrinsic value worth? Then when it trends towards that intrinsic value that you believe it to have, I mean, everyone has their own setups. Generally, a 120 point SMA is good for the detection of average. I guess that's like a long-term trend, but we can do a little bit better by selecting this and setting it to maybe a 10 SMA. So I want to show you an example where we're not gonna be out-windowed. It's usually 9, but we're gonna put it at 10. So say we had an area of value coming up over here. We see that it's within the area of value, it's close to the area of value, and what does it do? It seems to have a tweezer top on the top where you have it go green and then it goes red, and you see the tweezer tops on the bottom. That means it was trying to push that, it went down, and then you see enough indication here. This isn't a bullish engulfment because this green candle was not greater than the red candle. And it just generally trends down. It has a period of indecision here, but then it goes into the 3 black crows. Comes back, does somewhat of an evening star, goes down again, and then it's not really exactly a morning star. There are a few other patterns to consider here, but it goes up. So the way to trade something like that is to see when it gets close to an area of value, like a SMA curve of some sort, run through a pattern match, and if it does a certain type of pattern match, you can assume that it will follow that trend for a little while. Maybe it'll be the bearish pattern, maybe it'll be the bullish pattern, like over here. So that's how to play it, basically. There's a ton of other candlestick patterns here. Everyone's coming up with different patterns. There's some things that kind of show you multiple different, I think, considerations for this thing. Here, like this is something that you can probably see other people talk about: the bull flag, the rising three, the falling wedge, the bull pendant, ascending triangle, cup and handle. Cup and handle is a very powerful one. Inverse shoulder and hedge is very powerful as well. So the cup and handle, inverse head and shoulders, both of these are good things to learn. Um, the rest of these, I guess, can kind of be subjective. So the thing is, what you really want to do to make sure that these things are true is you can actually put them into some sort of a library. If you were going to do some coding, I have um, some code that can kind of do this, but there's other people on YouTube that kind of talk about utilizing this library, but it's called the Technical Analysis Library. It runs through C++ uh, implementation through Python, so it's pretty fast in terms of how fast it can kind of execute things on live trades, on live data sets. And we're going to go use this a lot more often when we talk about things, but basically you need to provide it with this information: the open, high, low, close, and the volume, and it will detect through that automatically where that trying to get back to the pattern recognition, but it'll detect at which time steps that those patterns kind of appear. Whether you have the two crow pattern, three advancing white soldiers, abandoned baby, evening doji star, uh, and a ton more that I cannot go into. And the reason why I don't really want to go into this is because even though candlestick patterns and pattern matching is a good way to analyze something, it doesn't give me data on the scale that it's supposed to. So say if I was to do this on the minute candlestick, this is very unreliable. And it's unreliable because every minute people are making up their minds. And even though, like, see here, this would be an evening star, it would indicate a downtrend, but quickly turns back into an uptrend. So personally, I don't use it a lot, but it's good to understand what a candle is and like what a candle is, how it can be used in conjunction with other candles to build a pattern. And like I said, some of the best patterns to check out would be this cup and handle and this inverse head and shoulders. You can also see this ascending triangle and see these falling wedge, but the thing is there's a bearish thesis on some of these, and not everything is 100% that this will break up into an upwards direction, because it can just as easily break out into a bearish direction. And people kind of have a bias towards bullish directions, so generally I don't like to take this thesis. I'm just saying the cup and handle and the inverse head and shoulders, very powerful. See them a lot. See people use them a lot. See people make money with them a lot. Um, and I told you how to trade them. Basically, you need let's go into a new thing. So you see a few bunch of candles here. Um, You see this be like the SMA. You see um, some sort of evening doji star over here that rejected the fair value and going downwards now. and you can make a bullish or bearish sentiment. Bearish. So this would be good to put shorts on. Now it's not good to short way to infinity because the farther it gets from the fair value assessment would mean that you are having a high probability that this could come right back up and maybe screw you later. So for the time being, this short thesis or this bearish sentiment is the law of the day. Now if it occurs maybe twice more, then you are very certain of a potential fall. You can definitely catch a decently good fall. Similarly, if the area of value is below the chart and you're seeing something go up, come back down, do a bullish, say a bullish engulfing or some bullish sentiment, then you can run a call option. Call or a buy for a long. And we'll go through this terminology later on, but this is a good bullish sentiment. So you have to have an assessment of fair value. No one can make this assessment for you. You've got to choose one windowing algorithm that you like. I like the 10 SMA, but some people prefer an EMA, and that's what we'll be talking about in the next episode, in the next lesson, basically. But this is how to trade candlesticks, and this is what candlesticks are in general. And I just hope you guys learned something good from this class. So.